And today I'm going to cover a very simple tool, simple for you getting started. So this is really if you don't yet have anything for bookkeeping, for keeping track of your accounts, your finances as a business. So it's really using a free tool, Google Sheets specifically, just to get you started. Hi there, welcome to yet another episode of Take That Business. And here is where we teach you how to leverage technology to get more done in your business. And today I'm going to cover a very simple tool, simple for you getting started. So this is really if you don't yet have anything for bookkeeping, for keeping track of your accounts, your finances as a business. So it's really using a free tool, Google Sheets specifically, just to get you started. I do have another video where I go into accounting software, so that is the recommended route. But if you're just getting started and you want something budget friendly, really free, and something you can use right now, like immediately after this video, this is the tool for you. So I'm going to just walk you through this, and I'll also give a link to this particular template so you can download and start keeping better track of your finances as a business. Let's get into it. So this is the template, and once you've made your own copy of it, go ahead and change this. Change the name to whatever name you find more appropriate, possibly put your company name right there. And then the first sheet in it that you're going to open is the budget sheet, which is this one right here that you see me focused on. And once you do that, you're going to change first, what are the income sources for your business? And you'll change this to whatever income sources are in your business. Let's give an example. If you're a bakery and maybe you make cookies, maybe you sell birthday cakes, and you want to track those separately from wedding cakes. So go ahead and for your particular business, put the various income sources that work for your business. And then after that, you're going to write down what are your cost of sales. And we've made provision for up to 5 income streams in this particular template, and also up to 5 types of cost, 5 categories of cost of sales. So cost of sales are any expenses that go directly towards creating the good or service that you're going to sell. So for example, let me use still the bakery as an example. If you're going to make cookies for sale, you're going to go out and buy flour, you're going to go out and buy sugar, you're going to go out and buy milk, and put all of these things together, and that's what goes directly into creating the cookies that you eventually go out and sell. So your cost of sales will have things like those things that went directly into creating what you eventually sell. So those are the things that you'll put here. And after you've put in the categories of the various cost of sales, and you'll then come down and give your expense categories. We've already populated this with some for you, and if you want to change any, you can go ahead and change any. You can add others right here all the way up to here. And for every one of these expense categories, there's a description for it here in the transaction types sheet. So if you read this, it should give you a bit of detail on what every one of these does. And again, if you change any of these, just as an example, then when you come here, this description will no longer be representative because these are updated automatically based on what is this side. You'll need to come this side now and update these descriptions to match what you've eventually put as your expenses. So I'll just reset that back to rent and utilities. And then lastly, as I mentioned, cost of sales, I've linked to a more detailed, I give a bit of a brief description of it here in transaction types. And then I link to an article where I explain a bit more about it. So you can go ahead and read that article. I give a lot more examples so that you're able to get a better understanding of what cost of sales is. So again, your income sources, your cost of sales, and your expense categories. This is the sheet that you use to just give a bit more detail on each of them, and these are updated automatically based on whatever it is you've defined here. So focus on defining in your budget, and the rest will take care of itself. So after you've done that, you've defined your income categories, you've defined your cost of sales categories, and you've defined your expense categories, you then get down to the actual budgeting. What that means is for every single month, you're going to project what are your expected sales of cookies, what are your expected sales of birthday cakes, and for every one of your income streams, what are your expected sales in every one of the months for the entire year. And you do that projection as well for your cost of sales, and then you do that for your expenses. What are the various expenses you anticipate will be there in your business for the entire year? This particular template makes a use of a financial year that runs from July to June, but if you use a calendar year, you use January to December, go ahead and update this. Change this to January and stretch it all the way to December. And so these other figures are filled in for you automatically. You have a total income computed for you there, a total cost of sales, a gross profit. Gross profit is really income minus total cost of sales. And then we have your total expenses being computed for you automatically, and then a net profit or loss indicated right here, which is your gross profit minus your expenses. So really, as a business person, this is one of the figures you'll be looking at quite a bit. And there's a bit more. You also want to be on top of your cash flow, but for this particular example, let's focus on your net profit or loss. And with this particular template, it will show you green if you have a profit, and red if you're projected if your budget indicates that you're going to make a loss in that month. So let me increase that, and you can see that it turns red automatically to indicate that with that projection, the business will be making a loss in that particular month. The other key thing is you need to write down what assumptions have you made as you've come up with this budget. With the projections that go this long, you're going to make some assumptions. So for example, here there's an anticipation to hire 2 new salespeople in February, and as you can see that when we come to salaries and wages, there's a jump from January to February, and that's because of this assumption. You also see that in the income side of things, there's a projection that negotiations with a particular client will close in April, and there's an anticipated increase in income as a result of that. So you can see that from this month to this month, this jump in income is expected to come from closing that sale with that particular client. So go ahead and write down all the key assumptions. That way, when you're reviewing as the year progresses, you're able to go back to your assumptions and see where were you spot on, and get a better sense of how you're doing vis-a-vis what you planned. And then these totals will also be calculated for you automatically. What's your total income? What is your total cost of sales? What are your total expenses, which are right here? And then what's your expected annual net profit for your business? And another really key thing is, if even after going through the resources linked to cost of sales is still giving you a challenge, you can start out without it. The really key thing starting out is, at the very minimum, keep track of your income and your expenses so that you can get you can know whether your business is profitable at a bare minimum. As you get put in place better systems, talk to some finance people, and they give you advice that's contextual to your particular business, you can also then start tracking cost of sales. So if it's giving you a bit of a challenge, you can leave it out. So just remove this like that. Go ahead and remove all these figures just by removing them just like that. And then you then also need to come to the profit and loss statement and remove the cost of sales. So now that you've finished the budgeting process, depending on what you've decided to do. You then come to the next thing. You now actually start tracking the actual transactions in the business. So in budgeting, you are planning, but now rubber has hit the road. Start tracking the income and expenses of the business, the actual ones. So whenever there's an income into the business, or whenever there is an expense, money leaving the business, put the date in here, put a description. If it's an expense, put the actual amount and which account was it coming from. Maybe you're using cash, maybe you use mobile money if your business supports that. Maybe you use the bank transfer to make that expense. So capture that. And then which transaction type does this expense belong to? And these figures here, these categories here are picked automatically from whatever you entered in your budget. So take time to populate your budget properly before you come to this, because then it will make it easier for you to categorize your expenses and your incomes easily. And then after selecting the type, then who were you paying to, or who did you receive money from? So in this case, we are paying for utilities, we are paying to the national water. Maybe also, to use another example, maybe the business bought notebooks, spent this amount of money, and that falls under office supplies and equipment, and the money was paid to Pristine Notebooks. That's the company the notebooks were bought from. The other thing I'll point out is, as a business, yes, you're going to keep track of these transactions digitally using a sheet like this, but you also want to have a file that you'll use to keep track of invoices that are given to you in case your business is handed physical invoices or physical receipts. You want to have a file that keeps track of those. But also, as a business, you might sometimes be dealing in cash, or you might be dealing with entities that want a physical document whenever money changes hands, and an e-version won't suffice. So in these various instances, you also want to keep track of receipt numbers and payment vouchers. So these are for you as a business. So as a business, you want to have a receipt book, whether that is done automatically using a system, or you have a receipt book that you actually print out, or you create one digitally, and whenever money comes into the business, you issue a receipt to whoever has given you the money. So if it's money coming into the business, for example, let's look at this example where there's an entity that has purchased a wedding cake from you. Peter and Jen's wedding have purchased a wedding cake from you. So it's income that's coming into the business. In that case, you want to give Peter and Jen a receipt. Yeah, your business will issue a receipt for the money that you've received, and you'd write here the receipt number. So these receipts are numbered chronologically. So you'd issue a receipt and write the receipt number here. So when you have money leaving the business, so you're paying for something, so an expense, then you want to issue a payment voucher. And I link to a bit of a description where I talk about payment vouchers and give some samples. But basically, as a business, you want to have receipts, so that you issue receipts when money comes in, and you also want to issue payment vouchers when money leaves the business. So what this column is doing for you, it's giving you a link between this document you have here that's keeping track of your transactions, this digital document. It's giving you a link between this and your file, your physical file. And those files are usually reviewed when you have someone from finance come in, maybe once a quarter, once a month, to just go over your books as is necessary. So it's key from that perspective, just to have a well-rounded finances. And then lastly, there's a column here called balance, and what it's doing is trying to keep track of how much money do you have how much money do you have left in all your accounts combined. How much cash do you have left in all your accounts combined? So for example, if at the start of these transactions, when you started making recording these transactions, you had 1 million shillings in your account. And what happens is you paid for utilities 350. You can see that the balance column automatically updated to show that you now have 650 left. If you went ahead and made yet another payment of 250, you now have just 400,000 left, and so on and so forth. So this column is updated for you automatically, just keeping track of how much you have in all your accounts combined. And you can see that when it goes to negative, it's an indicator that you're spending money that the business doesn't have. So it's very likely that this money is coming from you, the entrepreneur, or from another source. Yeah, so it's just a good column to keep an eye on, so you know what kind of money is going around in the business. And then lastly, we then now get to have an overview of the business, the profit and loss statement for the business. And this profit and loss is computed automatically based on everything you've been entering here in your transactions. So your profit and loss will have how much money have you made from each of the income streams. So from cookies, we haven't made any sale. Birthday cakes, we've sold 200,000. Wedding cakes, we've sold that amount, and so on and so forth. So this will give you an overview. How much have you made in total as a business up till now? How much has gone into cost of sales? And again, remember I said if the cost of sales, even with the article that I've linked to, if it's still a bit of an issue, you can leave out this for a start, so that you're tracking strictly income and expenses. And then lastly, it will give you a breakdown of these various expenses. How much have you spent in the business so far on every one of these expense categories? And as you can see, this business here is showing a loss at this particular point in time, which is not cool at all. So you can see just by looking at that, you then need to up your sales to ensure that you get into a better place financially. So you can see it's not a complicated template, but it's giving you some really good indicators. It's letting you know, are you spending more than the business has? Are you making money as a business? Are you making a profit? And also allowing you to plan your finances, to budget for a bit of a longer period of time as you get started. So that was it. I hope you got value from that. Remember that as a business, it is really critical for you to be on top of your finances. You should not leave it to chance. You should not leave it to the book that you're writing this money in. And also very key, you want to separate your personal finances from the business finances. And one of the key ways to do that is just keeping records of your business expenses and business incomes. And the tool we've just gone through helps you do that very simply, very easily, and free as a starting point. Thank you, and see you in our next episode. Hit subscribe so you get notified immediately. See you.